Good afternoon and welcome to the EasyJet PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll, and then I'd like to hand you over to Head of Investor Relations, Adrian. Good afternoon, sir.
Hi there. Good afternoon, everyone, and thank you for joining me today. I plan to speak for about 5 to 10 minutes just through where we are today currently in terms of current trading, talk through EasyJet's strategy and the medium-term targets. Then there'll be plenty of questions for you guys to ask, any questions that you like. So if we turn to the intro slide, we've just come through the first 6 months of our FY25 financial year. We've traded through this winter where we saw the results slightly improve year on year when you adjust for the timing of Easter. Easter is obviously an important travel period for a lot of people in Europe, and that moved out of Easter year on year fully into April. Therefore, 50 million of value transfer between April and March year on year was seen. So when adjusting for that, we saw a slight reduction in our winter losses, which was a good step forward. As we move through into this summer, we see positive demand. Customers continue to travel, customers continue to prioritise their travel, and we are seeing good demand for that as we move forward into this summer. That's evidenced by being sold more than we were at this point in time last year. So for our peak September quarter, we're currently 42% sold. Yes, there's a long way to go as there is in any time, any year at this stage. However, that is 2 percentage points up year on year. EasyJet Holidays continues to perform very well. It made 43 million of profits during this winter and is on track for early delivery of its medium-term target. Its medium-term target is to deliver greater than 250 million of profit before tax. When we think about upgauging is one of the other biggest levers that we've got for margin enhancement over the coming years at EasyJet. What does upgauging mean? It means replacing some of our older, smaller and less efficient aircraft with brand new A320neo or A321neo aircraft. We've got 82 A319 aircraft, which is your older generation aircraft with 156 seats on them today. Those 82 aircraft will be largely retired over the next 5 years, which will give us productivity and efficiency benefits as we move through. And then if we look at the balance sheet side of things, that we've got a strong investment grade balance sheet. The book value of our owned assets today is £4.6 billion. When we move through that modernisation of the fleet and the A319s leaving to be replaced by A320 and A321neos, as I just touched on, we will see the book value of our own fleet increase by more than 60% by FY28, and that will further strengthen the investment grade balance sheet that we've got today. So if you spend just a couple of minutes thinking about our strategy, we re-articulated our strategy about 2 years ago, and every decision that we make in the business is focused on these 4 key pillars of our strategy. So if we walk through each of those, I'll touch on what we've been doing on each of those. So building Europe's best network. EasyJet operates primarily out of primary slot-constrained airports where demand outstrips supply. We continue to focus on that. We've added aircraft into Milan Linate for the first time, so we've opened a base there with 5 aircraft. We've opened a base in Rome Fiumicino for this summer with 3 aircraft, and we continue to expand in the UK, opening a base with 3 aircraft in Southend. We continue to look to add new destination points or bases where demand is strongest, giving our customers a better choice of offering where they desire to travel. And we'll continue to do this, but primarily out of constrained primary airports across Western Europe, into Europe, or into some of those winter sun destinations in non-European flows, such as Cape Verde, Egypt, Turkey, Tunisia, etc. When we think about strengthening revenue, there's 2 things in there. One is EasyJet Holidays. If we touch on EasyJet Holidays for a moment, EasyJet Holidays continues to rapidly expand. We launched EasyJet Holidays just as we came into the pandemic. We then obviously paused it for a couple of years through the pandemic. So really we're 3 years into operational performance from EasyJet Holidays. Last year it made 190 million of profit before tax. This year, we're seeing another 25% customer growth in EasyJet Holidays, and we're not seeing margins having to be diluted as a result of that significant customer growth. It continues to go from strength to strength and is only 6% of the attachment rate on EasyJet seats. And what that 6% is on all EasyJet seats, excluding domestics, because domestics are not really a package holiday target market. Excluding domestics out of the network that we fly, 6% of our customers today are also buying an EasyJet holiday. There is significant headroom for continued growth within EasyJet Holidays. And then on the other side, within strengthening revenue, you've got everything that the airline does, whether that be cabin bags, speedy boarding, EasyJet Plus, car hire, insurance, etc. And we continue to focus on offering the customers the proposition and offering that they want, including in-flight retail as well, which is the service on board, whether that be duty-free, coffee, tea, cake, sandwiches, etc. And we're fully focused on offering the customer the proposition and products that they wish and desire. And then if we look at delivering ease and reliability, delivering ease and reliability is focused on getting the customer from A to B on time, every time, with a great customer experience. I think if you followed EasyJet for a while, we've consistently spoke around delivering the warmest welcome in the sky. We've expanded that to be focused on delivering the warmest welcome in the sky, but also on the ground, and how we can support our customers with their experiences on the ground. And that's something that we'll continue to do as we move through this summer. The operating environment that we're operating in is more challenged than it has been historically. Air traffic control delays are significantly higher than they have been historically. Through this winter, they were worse year on year than they were last year. And also airspace is congested. We've got the conflict going on in Ukraine, which means that airspace is closed, moving traffic further and further west. EasyJet has never historically operated into Ukraine, but what we do see is traffic comes further and further west, bringing in more congestion into airspace, which means air traffic control and the wider airspace is more challenging than it has been historically. We are focused on delivering customers the proposition that they want, which is getting on time to their place of destination. And then when we think about our low-cost model, EasyJet has low cost in its DNA. It was set up nearly 30 years ago to democratise travel, offering affordable fares for customers, letting them go on visit friends and family, go on holiday with their friends, relatives, and travel around Europe fundamentally. And that is something that we are fully focused on to continuing to deliver that today. That means that we have to be efficient in everything that we do operationally to deliver attractive fares in constrained airports with an efficient cost base. And we continue to do that through adding increased productivity and utilisation through the assets. We saw that this winter where asset productivity was up 5% year on year. We will continue to do that, especially through winter. And we'll continue to look at how we can be more efficient within our operations. So this time last year, we purchased a heavy base maintenance facility in Malta. That followed the insourcing all of our line maintenance over the last 24 months. Line maintenance is your day-to-day maintenance checks. We've now started to insource heavy base maintenance. So up to 25% of our heavy base maintenance will now be carried out in Malta in the facility we purchased last year. That will give us further efficiencies through the operational side, and the knock-on impacts of that will be more efficiencies through the cost base. We continue to use data and AI as well in the operations. We've got a tool that we use which is called SkySim, and that simulates our schedule ahead of time, and you can put parameters into that, such as what air traffic control will be, what delay minutes will be, what the weather will be like, and it will simulate our network, and it will kick out what it expects our operational performance to be. And that allows us to see any future pinch points and proactively take any actions before we get into the season, rather than historically you'd be waiting to see how your network performed and then making decisions in season when it's harder to take action. So we'll continue to utilise those tools and new tools as we move forward into the coming years. And fundamentally, all of our focus on these four key pillars should enable the output to be delivering our medium-term targets, which is on the right-hand side of this slide. We're focused on delivering a group PBT per seat of between £7 and £10. We set these medium-term targets in October 2023, and our focus is on When we set those, we were at £4.91 of profit before tax, and we were focused on how we move that to £7 to £10. EasyJet is also a highly capital-intensive industry. We are an assets company, and we are focused on deploying our assets where we can deliver a high-teen ROCE. And we'll continue to take action where assets are not delivering that high-teen ROCE that we expect. You'll have seen that through this winter where we took the tough decision to close bases in Toulouse and Venice, and we will continue to reallocate aircraft around the network to ensure that we are delivering that high-teen ROCE. EasyJet Holidays, look, I think they're going to be there or thereabouts this year on delivering more than 250 million of PBT. That will enable them to reset that target to a new medium-term target, and we look forward to updating the market on our new EasyJet Holidays target as we move through to the year end. And on capacity growth, we expect to grow at a circa 5% CAGR on our seats. That is broadly in line with EasyJet's historical growth rate. We are not focused on growing at all costs. If we do not think that we can grow at that rate and deliver a high-teen ROCE and good returns, we will not be growing at that rate. However, we believe that's the right growth rate for EasyJet. And then what does all of that mean if we bring that together? The output, we believe, is delivering a profit before tax of more than £1 billion of PBT. That is significantly higher than EasyJet historically has done, and that will be delivered through monetising better our primary airport network, leveraging EasyJet Holidays, and continuing to drive efficiencies through the cost base. And that is our core focus. And if we spend a couple of minutes on the value creation side of things, just stepping back into the middle column, I think that earnings growth will deliver attractive shareholder returns for the market. As we think about the other side of things, we've reinstated our dividends. Post-pandemic, we reinstated dividends at 10% of profit after tax in FY23, payable in FY24. And then on last year, we moved up to a dividend payout ratio of 20% of profit after tax. And we think that is a meaningful level of dividends, which is payable through cycle. And obviously, we are at the beginning of a cycle to retire the A319s from the fleet, so you will see elevated CapEx over the coming years, which will give us sustainability alongside structured earnings growth. I'll pause there and we will move on to questions. Please do ask questions in the chat. I'm more than happy to run through all questions.
Adrian, thank you very much for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab situated on the top right-hand corner of your screen. Just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via our investor dashboard. Adrian, as you can see, we received a number of questions throughout today's presentation. Can I please ask you to read out the questions and give responses where appropriate to do so, and I'll pick up from you at the end.
Yeah, absolutely. So first question is, could you share early indicators on conversation with booking growth from the Tesco's Club Card integration? Are any further integrations planned? Look, we have just set up the Tesco's Club Card offering. This gives EasyJet access to more than 23 million households within the UK. And we believe that your Tesco's customer will not look dissimilar from the EasyJet Holidays customer. And EasyJet Holidays has continued its rapid growth over recent years, but we believe to continue that, it's about awareness. We're seeing really strong customer satisfaction scores coming through EasyJet Holidays. That means we are seeing good repeat customer bookings. However, we need to continue to get that brand out there, and the partnership with Tesco's Club Card, I think, will be mutually beneficial for both sides. In terms of bookings rate, it's too early to give any detail on what bookings rate we're seeing coming through from Tesco's Club Card. But later in the year, when we've had a bit more time to see the bookings come through, we'll be happy to share some further details on that. And if we look, the second question is on in-flight retail. Profit per seat rose 15% year on year. Where do you see further upside from personalisation or third-party partnerships? It's a great question. So in-flight retail, historically pre-pandemic, we used to make about 43 pence per seat, so roughly £43 million a year from in-flight retail. We believe we should be making £1 per seat, so just over 100 million from the in-flight retail proposition. We're currently just below 70p, 70 million. So what do we think is still to go? Absolutely right in terms of the personalisation and how we make sure the product offering on board is what the customer wants. And that product offering will change depending on time of day that the flight is or where the flight is departing from and departing to. And we're continuing to utilise data better from our in-flight retail proposition and offering to work on that, and reducing waste, because there's a cost of waste as well. So you do not want products selling out, however you don't want high levels of wastage as well on the side. So it's continuing to optimise the product offering that we're providing. We saw some pretty positive results last year from offering Costa Coffee on board. That's continuing to come through. In terms of brand partnerships on board, I think we'll look to do things where they make sense. You can now get Tom Ford, Oz, and Jo Malone in terms of the fragrances on board. Historically, we haven't done that, and we'll continue to look at fundamentally offering the products that our customers would like. But I think there should be another 30p or circa 30 million of earnings growth from better monetisation and better products from the in-flight retail proposition. The other thing to note on that is we will continue to benefit from flying slightly further in terms of sector length. You'll have noticed that we are flying further than we have done historically, as that network has shifted slightly to flying more into non-European flows such as Egypt, Turkey, Tunisia, etc. Customers on those flights have a higher propensity to spend whilst on board because they're sat on the aircraft longer. So we should see a slight benefit from that as we move through the coming years as well. So the next question is, can we elaborate on the expected returns from the Newcastle base in FY26 and whether there will be leisure or city routes focused? So look, I mean, I think Newcastle will perform very well. If we were to go back to this time last year, we went back into Birmingham with a 3-aircraft base post-pandemic. Birmingham performed very well in year one, and I would expect Southend, which we've launched for this summer, to perform very much as Birmingham has. And then as we look forward to summer 26, when Newcastle opens, I think Newcastle will perform very similar to both Birmingham and Southend. And that's driven by, one, we're seeing leisure demand being very strong, especially in regional UK, but also EasyJet holidays. Those customers generally like to book package holidays, but historically EasyJet has not had an offering on the package holiday side of things. Now we have that. We have an attractive proposition for customers in those regional UK locations. And I think that we will give more granularity as we move through. It's only just gone on sale, but I would expect Newcastle to perform very well. As we think about the network type, it will be a mix, because EasyJet is a point-to-point operator where our aircraft return to their base at the end of the day alongside our pilots and cabin crew. Our pilots and cabin crew are back home at their base, at home with their families in their own beds each night, and that is key. So a very stereotypical day for an aircraft will look like 6 flights a day, unless it's doing a long flight down into a non-European flow. So it might say start in Newcastle, then go to Malaga, go back into Newcastle, then it might do a Canary Islands flight back into Newcastle, and then it might do a short trip at the end of the day into Amsterdam and back home again, because you need to get the aircraft utilisation and the productivity from it in the day. So you will find that we will be offering a good mix of leisure, city, and a few domestics from Newcastle when it goes fully on sale. The next question is, how do you see EasyJet's competitive position evolving over the next few years across Europe? Great question. I mean, look, I think we've seen our position at those constrained airports across Europe, not just in the UK, significantly growing as we've come out of the pandemic. So we've continued to take slots where they become available. So we've grown in London Gatwick, we've grown into Milan Linate, where we've never had aircraft based before. We've doubled our size in Porto and Lisbon coming out of the pandemic, and we'll continue to look to grow. We want to grow at circa 5% a year, and we want to take opportunities in those constrained airports. What we have seen in terms of the wider market, We've continued to see kind of flag-to-flag consolidations. Some of your Lufthansa, Air France and IAGs are looking to firm up their feeder network across Europe, which is why you've seen some consolidation between those carriers and the smaller flag carriers like the Lufthansa and ITA deal that was done most recently. We will continue to benefit from that because as part of those deals, you will normally find that the commission says that there needs to be some slots released. We will look to take slots and positions as part of any remedies on any deals. I think in terms of EasyJet and where we place ourselves, we're confident in our own organic journey to deliver £1 billion of profit before tax, and we're fully focused on executing against our targets. However, when there's opportunities that come up that offer value, we will continue to look to take those. The next question, so said that we are focused on building Europe's best network and expansion in non-European places like Cape Verde and Tunisia. Will this involve M&A? Are you seeking M&A opportunities? No, we do not need an M&A to deliver on those. If we think about Cape Verde, for example, we've launched it from the UK and we've launched it from Portugal. EasyJet already has a very strong brand recognition in those source markets where we're flying into Cape Verde from, and we've seen very strong from those. We don't need to go out and buy anyone to buy a presence. EasyJet has a well-known brand that is fully understood and highly recognisable across Europe. Fundamentally, the majority of our growth will come from existing places, so it will very much feel like an EasyJet flight and network that you'd expect. Newcastle is a good example. You won't find us flying into random new locations from Newcastle much of the time. It'll be very much what you'd expect from EasyJet into your primary cities like your Genevas, like your Amsterdam Schiphol, like your Basels, Charles de Gaulle's, etc., or into those leisure destinations that you very much expect to see EasyJet flights going into, whether that be the Canary Islands, Greek islands, mainland Spain, or more and more into some of these non-EU flows, which we're seeing proving to be very popular with our customers. That's the end of the questions that we've got in the chat there currently.
Adrian, thank you for answering all those questions you can from investors. And of course, the company can review all questions submitted today and will publish those responses on the Investor Meet Company platform. Just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Adrian, could I please just ask you for a few closing comments?
Yeah, absolutely. And we've just had one final question come in, so let me pick up on that and then I will wrap up. So the final question here was, we've got an ambitious plan to modernise and expand the fleet to 28. Any issues with aircraft delivery delays? Great question. So what we've seen, I think all airlines globally have seen challenges on the production side, whether that be through Airbus or Boeing. EasyJet is a fully Airbus-operated fleet powered by CFM engines. So I think are very fortunate to be in the position operating those two pieces of equipment that we are very happy with. We are not, however, being insulated from delivery delays. As I said, I think every airline globally is being exposed to delivery delays. What we have seen, though, over the last 6 months is those starting to stabilise. So the fleet delivery profile that we showed at our half-year results a week last Thursday, that is the current view that we will get through from Airbus, and we continue to work constructively with them as we move through. We were due to get 9 aircraft this year. We've already had those 9 aircraft ahead of peak summer, which is positive. Next year, we're due to get 17 aircraft, then deliveries ramp up to 30 and 43 aircraft. We are very confident that if those deliveries come through, that gives us the fleet modernisation to deliver the upgauging benefit of greater than £3 of unit cost per seat savings, which is a structural key part to delivering the £1 billion of profit before tax. And we'll continue to work with Airbus collaboratively as we move through the coming periods. I'll look to wrap up there. And look, I think as a business, we've got what we believe is the right strategy, and the output of delivering on that strategy being our medium-term targets. And that is the primary focus, is how we execute against our strategy, and we continue to progress towards the £1 billion of profit before tax, whilst delivering and moving towards that high-teen ROCE. And that is the core focus for us, that we believe will deliver attractive shareholder returns on top of the 20% of ordinary dividends on the profit after tax that we'll continue to pay out. And look, thank you very much for joining and listening in today. Please do fire up any other further questions that you want to us. We're always more than happy to pick up.
Adrian, thank you for updating investors today. Now, please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This may only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of EasyJet PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.